Good morning, folks. There are three things that rub together today. The market just printed all-time highs. The Iran peace deal, everybody's cheering, still hasn't been signed, and Hormuz is still shut. And the Fed under Kevin Warsh is leaning toward a rate hike in 5 weeks. Records up top, an unfinished war underneath, and a hawk at the Fed. Let's connect the dots. I'm Charles Brown, your portfolio manager at CB3 Financial. This is your weekly podcast, and it begins now. We have a fresh milestone. The S&P 500 closed at an all-time high, 7736.52 on Tuesday, August 5th, its first record in 2 months. That's after July stalled out and the Dow crossed 54,000. So what lit the fuse? The AI trade came roaring back, and that helped us in our DS portfolio. Nearly a 6% pop in 4 sessions. Even Palantir, which we have dropped, came out and had a really strong day, but they have a long way to make up from where we sold them a month or so ago. Microsoft, Amazon, Alphabet all delivered strong quarters, and the semiconductors followed. The other tailwind, and file this away, folks, Iran deal hopes. Part of this rally is the market betting peace breaks out. But my standing worry hasn't gone away. Bulls call this AI move a broadening out. Skeptics, and I lean skeptic, say the economy is getting more concentrated on one giant AI gravy train, not less. And that is the reason that we dropped our CG and GI programs and concentrated all of you in DS, discretionary strategies, for the high-risk portion of your portfolio, and MP, market proxy, for the steady market growth and income generation parts of your portfolio. So enjoy the record. Don't chase it high and cheap, so to speak. We rebalance the AI winners, keep energy as a ballast, stay up in quality, and a record built partly on a hope for a deal that just isn't something that I'm going to stick with for the long run. So the gap between headline and ground truth, the market's trading Iran deal optimism. It's done that for the better part of 5 months. Trump canceled a planned strike. Everybody wants to believe it's over. It's not over. Nothing is signed. Iran's parliament has not approved the draft shipping deal, and the draft is ugly. It bars the U.S. and Israeli ships outright. That's ridiculous. Trump's not going to sign that, and it fines violators 20% of cargo value. Why are we even listening to this kind of ridiculous bargaining? And I don't know any better than you guys do, but it's colossally frustrating. Tehran says the U.S. must lift its blockade first. Not a handshake, it's a standoff. And I still don't think this is going to happen without significant military intervention, and it's going to happen right in front of the midterms, and that's just awful. The Strait of Hormuz is still effectively closed. Iran calls its passage unfeasible. Well, there you go. So not just Iran, the Houthis hit Saudi positions again and are threatening ships. Live multi-front conflicts, all right? So the scoreboard, Brent crude is back above $85 in West Texas, which is our standard in America, at $78, off the July spikes toward $100, but still a fat geopolitical risk premium. It's just not going to go away until the fighting stops. And honestly, folks, I don't see that happening before the midterms. I just don't. Roughly 20% of the world's oil goes through that strait, and it's a contested area, and there's a premium paid. Staple that into inflation, and that's why the Fed is in their position the way they are right now. So my take, same as always, I manage money on facts, not hope. A truce for the parliament hasn't been ratified over a strait that's still shut. Strikes are still flying. That's a ceasefire of the week. It's not peace, and I hope I'm wrong. And that could yank the Fed's chain, which brings me to point number 3. Watch one person this autumn. Fed Chair Kevin Warsh, and he is not the cavalry coming in to save stocks. He is a hawk. And that is much to the chagrin of Donald Trump. Rates held at 3.5 to 3 3/4. That was the last meeting, July 28 to 29. But a divided 9 to 3 vote with 3 officials actually wanting to hike, not cut, but hike. The next meeting is September 15 to 16, which means there's no meeting this month. The market now is pricing roughly a coin flip or better on a hike, about 54 to 56% odds. JP Morgan flat out expects a 25 basis point rate hike. But all of those prognoses came out prior to last Friday. That's just 3 days ago. Non-farm payroll with a shocking revision downward. Actually a loss of jobs instead of a small gain. So I don't know if that means there's going to be a rate cut, but it might prevent a rate hike, which in many ways, the market might say, you know what, that's a victory. So why does this matter? The July hold lowers the bar for September. And of course, there's a credibility reinforcing on this hike. The whole ball game for your and my portfolios for 15-year investors leaning on the Fed put, stocks will drop unless this war gets completed soon. All right, Warsh signals the opposite. He'll hike into an oil shock. The safety net you've relied on just got yanked, and if it's even there. And this is why we continue to have the option spreads in discretionary strategies. And some of you are also using it in market proxy, although we don't recommend that. So our playbook is careful on long duration bonds. We're still not using them in market proxy. We favor cash flow and quality over story stocks, and we're holding some dry powder with some cash. So tie it all together. The record's built partly on a peace that isn't signed, a war that isn't done, a closed strait that's not open, and still bleeding an oil premium. That's why we're here actively managing your money every single day. I hope that helps. Please join us this Thursday night. That's August 13th for CB3 Live, the August edition. That'll be the last one for the summer, and then we'll be back in September, of course. We'll have a lot of information for you. Stick with us. We will see you Thursday night for CB3 Live. Until then, have a great week ahead.